Welcome everyone, Brandt Butt here with my colleague Grant White for the Endeavour Exchange. We're going to be talking about all things affecting your money. New year, 2021, very excited. Obviously, 2020 was a challenging year. I think we're all looking forward to a year where we can be a lot more optimistic about the future here. So with that, kind of wanted to get right into it with you, Grant. 2020 obviously was a challenging year for many individuals out there, and obviously the markets early in March and April, where we saw one of the quickest sell-offs in the history of the markets, as well as one of the quickest rebounds. So I think one of the questions that I think we're getting from a lot of people and that we have is ultimately, will the stock leaders that we saw in 2020 continue to lead the way in 2021?
Yeah, really good question. Because it was such a really interesting year in 2020. I mean, like there was, volatility all over the place, right? Between March and the end of the year, insane movements in the markets and insane movements in a lot of companies. I mean, some companies were up over 700% last year. I don't know if we need to name names exactly on those companies, but anyway, like there was lots and lots of movement on there. So, will those companies continue to lead in 2021? Actually, I would tend to think not. I think they still have potential to do really well. And if you're owning really high quality companies in that space, if in particular we're talking about the tech companies that did so well last year. So if you're owning really high quality companies there, I think that they have the potential to continue on to do well. But are they going to lead the way? I don't think so. I think that there's going to be other movements going on here. I think there's going to be other companies. If I was a betting person, which I'm typically not, but if I was a betting person, I'd probably lean more towards things that are going to do really well coming out of the pandemic now, as the pandemic subsides.
Mm-hmm.
Vaccinations are happening, maybe slower than most people would like, but they are happening, and so it's likely we come out of this thing this year, and so things like traveling will return, leisure. Some of those consumer discretionary businesses that didn't get the cash last year, that couldn't get the cash last year for consumers. I think those things have a lot of potential to do really well. Maybe it's certain airlines that could really pop. I mean, again, this is all kind of speculative stuff. So again, this is not necessarily an investment philosophy, and predictions are kind of like a sieve holding water, So
Yeah.
I think that the main point is, there's a lot of potential out there, and I do think that we're heading into a situation where there's a lot of cash that is ready to go to work and ready to spend, and so that's going to find a home, and I think that's going to create some pops. So consumer discretionaries, airlines, travel businesses. Disney's one that I'm pretty interested in myself. I'd be careful on pricing though. Like I think Disney's already fairly well priced, so I wouldn't necessarily jump into that one, but I like that company just from a perspective of, you're going to do well on the travel side of things, but it's got a lot of depth to it with like things like video streaming and stuff like that now as well.
Let's take a look we have a chart here of some of the top performing S&P 500 stocks of 2020. If we take a look at this, I mean, you referenced one of those names already, Tesla, who is up over 700% for the year. The e-commerce site Etsy over 300%. NVIDIA, so we're looking at computer chips, semiconductors here as well. PayPal, obviously payments, online sales, e-commerce was a big driver for companies like PayPal. A lot of these companies are great companies, and I think they definitely have a future ahead of them. Whether or not they're going to be leaders this year, I don't ultimately know. But I think you're right. I think as we move through this pandemic and get closer to the other side, there's a lot of really beaten down companies and beaten down names that when things return and normalize, have a lot of runway to recover. So. Right now, valuations across the board are still fairly high with a lot of these tech names, and so that's something I think investors should ultimately be aware of if they're betting on these winners of 2020 continuing to, I guess, perform the way they did in 2020, moving through to 2021.
Yeah, I mean, I still really like certain financials as well that haven't quite caught up with the rest of the market. But speaking of tech, I mean, because that was really driving things. You look at your list there, you got Tesla, really, I consider it to be almost a tech company, Nvidia, and so many more. Apple, you name it, did so well. So, like, I think the bigger question is, does tech have the long legs left in them after last year?
Well, last year obviously was a big year for tech. We're looking at the Nasdaq; it was up over 40%. So you obviously wouldn't, if you just looked at that number, you would have no idea that economies around the world struggled so much. But obviously, we're talking about tech names that benefited from kind of the shutdowns that we saw across the globe. With that said, I mean, we're seeing right now, and it's been happening lots in the last couple of weeks across the globe. We're seeing countries kind of take aim at a lot of these companies, the Amazons, the Googles, Apples, Alibaba. Europe's taken a very tough stance with fines and new rules introduced with its Digital Markets Act. So, the United States, we're seeing some antitrust suits there. We're looking at social media companies, their use of personal data, user engagement, and in the case of Facebook and a number of other companies, monopoly concerns. So in China, obviously a big headline that we've seen as of recently is the kind of squashing of Ant Financial's IPO, and now we're seeing even some scrutiny on Alibaba and its e-commerce platform. Lots of talk about Jack Ma, the founder there. So I mean, these are definitely things that are obviously concerning for the tech industry as a whole, some of these larger names and how big they've grown. And so there is there is opportunity that this could stunt some of that growth. And I know we have a second chart here, and this is one where it's just looking previous couple days here, where it became clear that ultimately the Democrats were going to control Senate, which now paves the way for the Biden administration to kind of tackle a lot of the agenda items that they had without being restricted by a Senate that's controlled by the Republicans. So you'll see there in this chart, the Nasdaq didn't. This is a signal from the markets that ultimately, I think, people are of the opinion that tech is going to be under the spotlight with the new administration and with the Senate now, slight majority to the Democrats. But with that said, broadly speaking, I think tech is going to continue to be an outperformer over the next 10 years. Now, tech is a broad word. Big tech, under fire, but I think there's going to be some companies and names. We have cloud computing, AI, the Internet of Things, gaming, entertainment, Disney Plus and their streaming platform. There's a lot of good companies out there that, as tech becomes more a part of their business, that ultimately it'll create some opportunities for them and growth potential. So at the end of the day, digital stuff is just much easier to scale, a lot less costly to implement, and tech is going to be something that we're talking about for a long time, in my opinion.
Yeah, I think, I mean, you're right. The reality is, and I've said this many times, tech today is the promise of the early 2000s. And what tech was supposed to be back then is now where we are today. And these are some of the best companies in the world. And you're right, it's so broad. Like, we're not just talking about like websites anymore. We're talking about everything that we do. You're talking about 5G, cloud computing, all of it, right? Streaming. And so this is dominant in our lives, and it's not going away. And in fact, the pandemic probably accelerated, as we've said before, probably 4 or 5 years, right? So it's here to stay. And I think the one thing I would add to this, like if we're like leading into 2021, whether it's tech or any of the other companies, is avoid the panic selling, because I think we're still going to see volatility this year. Alibaba is a prime example of what we've seen in the last few weeks. Avoid the panic selling. The best days tend to come right after the worst days, and so stay the course. If it's a good quality tech company or any other company, stay the course on it.
Absolutely. Pandemic is the theme. It really was there wasn't much else people were focused on in 2020. But the pandemic was kind of interesting because it affects every part of the world, but different places have dealt with it differently and are dealing with it better than others. And so that ultimately brings us to the question that I wanted to pose to you is, where is the best growth going to come from? Will the best growth come from North America, or are we going to see it abroad?
It's not going to be in North America. I mean, I'm pretty certain of that. I mean, I don't know where the numbers are finished off the year yet because they haven't really been released for GDP as to what everything ended up in 2020. I think it's safe to say, the thought was as of a month ago that North America and the Western world, if you will, kind of weathered the GDP storm a little bit better than some other parts of the world. And again, we'll see what the final numbers came in at. But at the same time, I think that you're going to see a far better growth outside of North America, in particular. China and India, I think, are going to do extremely well in the recovery, and probably will do more than double the GDP growth in 2021 as compared to compared to what we're going to see in the United States and in Canada. Now, that being said, I mean, these are again all predictions, but I think that the fact that China and India, or China in particular, is exiting the pandemic, they're a little bit further ahead in the timeline, so they're a little bit further ahead than North America is right now. So I think that they're just got a little bit of a head start leading into 2021, and so this is a little bit of timing as well that's going into it. But I think that's where we're going to see better growth there.
Yeah.
But that being said, I think there's going to be lots of growth. I mean, we're talking about the U.S. growing at a 3.5% rate potentially this year, which is absolutely massive for a country of their size.
Yeah. I'm a little more 1 foot in on kind of each side of the pond here. I think initially, you're right, abroad, we're going to see more growth coming out of this pandemic sooner. Actually, we're seeing it already, as China's already on pace to be back at their pre-pandemic levels, and other parts of Asia as well. I think something that not a ton of people are talking about, but the tensions between the two nations, China and the U.S., the two largest nations in the world from an economic standpoint, the tensions are leading to this separating and untangling of their tech industries and ultimately the industries of the future. So, we're seeing China try to gain more control over their semiconductor industry so they're not so reliant on the United States, and vice versa as well. And I think because of this over the long term, ultimately, I think you're going to want to have money on both sides here, because I think there's opportunities. And like you mentioned, we're talking about this and making these, opinions and judgments, but that we could ultimately be wrong. And I think you truly do want to have kind of both sides in the race for you, and diversified across the board. So I don't think this is a U.S. versus China. I think there's opportunities in kind of both countries and as well just abroad. So that's kind of my take.
Ultimately, we're investing in businesses and I mean, other asset classes as well. But in this case, we're talking about businesses. And so yeah, I mean, you're going to have great American businesses. You're going to have great Canadian businesses. You're going to have great Chinese businesses. And so, from that perspective, 100%. I mean, you never put, especially with the things going on today and the debates going on, especially down south, you would never put all of your money necessarily into Chinese companies, for example. But in saying that, I think that there is a lot of really great opportunity there. And when you look at people's portfolios in Canada, I mean, most people are still at 70% Canadian, and I think they're missing absurd. There's a good way to put it, because I think they're missing a huge opportunity both in the U.S. and overseas.
They've missed a huge opportunity. They will not have done as well as people who have been diversified, into the United States and overseas as well.
Yeah, and that leads into planning too. I mean, ultimately, at the end of the day, we're a planning firm. So, how should families be evaluating their planning right now? Because I think that's actually the bigger question today, as compared to like, where are you investing your money? How are you planning today?
Well, first question is, do you have a plan? I think we are continuously meeting individuals that new prospective clients, and so many of them are coming to us with no plan in place. They had an advisor, they invested their money, whether it's in mutual funds, stocks, however, but there was never really a plan in place that was ultimately a roadmap to helping them achieve some of their financial goals. So first question is, do you have a plan in place? If not, you probably should think about it. And once you start going through the process, I think the first step then is ultimately defining, as a family, as an individual, defining your goals. What are you trying to accomplish? Are you wanting to retire? Is it financial freedom? Do you have grandchildren that you want to help send to university, or children that you want to send to university? I know a big one for us is we work with a lot of clients who go, I want to own a cabin one day. A very Manitoba thing to strive for, obviously. Buying a dream home is another big one. So once you have those kind of goals laid out, then you can start looking at, okay, here's my financial situation. What do I need to do? You work backwards. What do I need to do to ultimately get to where I want to go? Which goals are priorities? Because sometimes, we have a lot of goals, and just given circumstances, they may not all be achievable, which is important when you start kind of taking a look at them. Why it's important to look at them and prioritize. The other one I think that's big today. Obviously, everyone's aware interest rates are at all-time lows. So debt is something that I think people should be looking at. Are you able to consolidate debt? With mortgage rates so low, I've seen clients that have been able to essentially access equity that's built up in their homes and use that to actually pay off a fairly high interest debt. So now obviously their mortgage is a little bit larger, but the month-to-month payments and the ability to get out of a debt situation where you're paying more interest than you should, that's one way to go about it. Refinancing, there's lots of opportunities if you own a business. Taking advantage of these low interest rates, obviously within reason. Emergency funds. Do you have one? The pandemic really showed us that if you don't, there's just things in this world that can occur and happen that are unforeseen, unpredictable. And so I think this is a great time, if you made it through this pandemic and you're sitting in a comfortable position, it's a good time to look at, hey, should I have an emergency fund in place? Because there are just things that can come up. And so what do I need? And ultimately, what will allow me to sleep at night? So that's another area I think people should consider. Insurance, always a good time. We come across a number of individuals and we sit down and we look at how much they're making, all the goals that they have for their family, the things that they want to achieve, their kids, sending their kids to university. And a lot of times they are underinsured. If something happened to the primary income earner in that family, it would be very difficult for their family out of that situation. So, ultimately just taking a look at that, what are the things you want to protect? How much does it cost? And making a decision. So, ultimately, if you're working with an advisor and you don't have a plan and they've yet to talk to you about a number of these items that I kind of threw out here, you should probably be exploring your options, because that is ultimately what a financial advisor, an investment advisor, should be looking to do for you. And I kind of wanted to leave it off with a great quote that I read in a book from Morgan Housel about the psychology of money. And he talks about, he says, quote, "The most important part of every plan is planning on your plan not going according to plan." So really what he means is that there's so many, when we do this planning work, nothing's going to work out perfect. It's not going to work out exactly how the financial plan is laid out, but it's a roadmap. It's a way to measure your growth towards your goals. And it's a way to, make decisions when things come your way that are educated decisions around your money, so that you have the information you need to make a right decision. So wanted to kind of close out on that question with that.
I honestly don't know how you do it without a plan, to be honest. Like, everybody's investing without financial plans in place, and they don't know what rate of return they need to be successful. They don't know how much money, more importantly, they need to put into their investments to be successful. So you mentioned absurd earlier. I think it's absurd to be investing without a financial plan. I mean, you're winging it, which is fine. You might end up okay, but why not make sure that you're going to be okay?
Yeah.
Better than okay, right? I mean, that's what it's about. Let's make sure that everybody's doing great. Have a plan in place. It takes care of it.
Absolutely. Brings us into kind of a more micro planning topic here. I think one of the most challenging parts of 2020, and I know we've been on lockdown here in Manitoba, and a lot of it has to do with some of the tragic stories that we're hearing across the country in our hospitals, and obviously a number of care homes. I know even prior to the pandemic, this was something that was starting to come up more and more with clients, but the pandemic has obviously accelerated these conversations. And the question is, should long-term care homes still be the goal for individuals later in life?
I think this is a really good time to be asking this question. I know that this was kind of a given for a lot of people, that they were going to go into a long-term care home or an assisted living home, and that was one of the chapters in life, right? Mm-hmm. And obviously the pandemic has forced a lot of people to reconsider that because of what's happened, and it is tragic. And I think what this really comes down to, it is, at the end of the day, it is a subjective thing. It's a totally a personal decision. So there's no one right answer for anybody or for everybody on this one. But the point is, have options available to you. And nobody is really planning for those other options. Nobody's planning for the fact that maybe you want to have in-home care. And maybe that in-home care is going to keep you in your house, which you love, or your condo, or whatever it is, and it's going to keep you there longer, going to keep you there happier, and so on and so forth. Nobody's planning for that. Well, we're planning for that now. I mean, we're planning for that because I think that this is important. And if you have the option, it's simply have to ask yourself, do you want the option to stay in your home longer and have the in-home care, or would you still prefer to go to one of these assisted living places? And either way is fine, but you just need to know what those options are. So there's lots of insurance products that are available and solutions that are available that if you start with them early enough, they're quite affordable and will take care of those expenses. Or we need to build that into a projection for you in terms of a cost that's going to be coming down the road at some point, and make sure that that's taken care of as well. Because it can be costly, but it's at the same time, it's probably worth it for a lot. Well, it is worth it for a lot of people. I know that.
When would you say, Grant, when would you recommend starting to have these conversations about, some of these planning solutions and products that are available that come with, long-term care, either a conversion or attached to it? Like when, is this the conversation that you're having in your 30s, 40s, 50s? Like when are you suggesting that advisors and individuals start thinking about these things?
Well, I think advisors should be bringing this up with their clients as soon as possible, because it is a conversation that people should be having in their 30s. I know it's not that interesting in their 30s. I get it. I know that nobody's planning for what they're going to be doing when they're 75, 80, 85 years old when they're 30. But at the same time, I think it's a conversation worth having, and there are certain things that you can do today that are going to could end up converting over to being that solution later on. Like, critical illness insurance, for example. I don't want to do a product sale here, but critical illness insurance is much more valuable to somebody in their 30s and 40s and 50s probably even than like a long-term care insurance solution. But you can have a solution from critical illness that converts over to long-term care when you're later on in your life, and then it can help to cover the costs of that long-term care needs for having people come into your home, things like that. So I absolutely think it's a conversation that should be happening as soon as possible. And with the mindset that I'm not the advisor. I'm not the person that always says push everything off for planning down the road. That's absolutely not what I recommend. I think that everybody's got to live for today while planning for the future. So I really like solutions that are flexible, that can convert into that longer term plan. But at the same time, I want everybody living for today. I wouldn't put all your money into long-term care insurance if it's the cost of your lifestyle today. Let's put it that way.
Yeah. Great.
So I think a really great question to close this exchange off on is related to taxes, because we know governments have spent a ton of money. Our government has spent a ton of money through the pandemic, and again, we're not going to get into how that money was spent and what it should have been done or what it shouldn't have been doing. But anyway, I think the one question, and we've been talking to a lot of the best tax professionals in the city about this, and we're all kind of the same mindset that we think taxes have a good potential to be going up. And it could be in many different forms, but we think that there's potential for taxes to go up. So where are taxes going? What do you think?
Is there anywhere but up? Just throw out some numbers here. Our government, our government spending is nearly 60% of GDP, which is the highest level in the developed world. We have the highest deficit to GDP ratio of 19.9%. The pandemic has accelerated a lot of the trends that we've seen previously in inequality and a lot of individuals being left behind because the skills that they have are no longer applicable to kind of the world that we're living in here in North America. And so, with the spending that we've seen, I don't think it's a question of if they're going up. It's going to be a matter of when. And even south of the border with our American neighbors there now, I referenced the Senate now flipping over to a Democratic Senate. This has potential, or they have now potential to see some of these tax rates rising down there for businesses and individuals as well. Now that that's not the Senate isn't controlled by the Republicans. So it's on Biden's agenda. I think north, south of the border, this is probably a global thing more than anything, and that, you know, there was spending that had to be done, but ultimately, you know, taxes are going to at least have to help us dig our way out of that. So growth is going to have to help as well, but I don't think it's a question that taxes are likely going to be moving upwards in the future.
Yeah, well, I think you're right. I mean, I think if I'm a person who owns U.S. property, for example, I'm a little bit concerned about what the U.S. is going to do. If I'm a incorporated professional or incorporated business owner here in Canada, I'm a little bit concerned about what's going to happen. If I'm somebody who has capital gains in my portfolio, I'm a little bit concerned about that as well. So I think now we're talking about investments, and I think everybody's talking about how to invest your money these days. Nobody's really talking again about how to plan for like the tax side of things, because really, if you can save a lot of money on taxes, I mean, that's as good, if not better, than like the investment returns you're probably going to receive in your portfolio.
Absolutely.
So I think this is a huge conversation that needs to be happening, and especially right now. And there is lots of like solutions available as we know it. There's lots of planning work that can be done. I mean, you and I have been working on this very closely with a lot of our incorporated professional clients in particular, and so we know there's a lot that can be done, but it should be getting looked at. Because I think that potentially has to be it could be the story of the next year or two, is what tax rates are going to look like here in Canada, and you're right, maybe abroad as well.
I was going to say, you know, an average investment portfolio with good tax planning is going to leave you with a lot more than a good an above average investment portfolio with poor tax planning. So, like you said, this is something that everyone's talking about investment returns, but I know here at Endeavour, we're working a lot with the incorporated professionals and business owners, dentists, doctors, our family-owned businesses, and taking a look at their situation and seeing, how much and what are the areas that we can start helping them, save taxes.
Yeah, absolutely.
Well, with that's
a good one.
Yeah, that's it for today on the Endeavour Exchange. Hope anyone who tuned in and enjoyed the information. As always, if there's any questions, feel free to reach out. You can visit us at www.endeavourwealth.ca. You'll find all of our colleagues and employees there. Click on our images, and our contact information is there. So always open to questions.